So if you're playing the macro game, looking how and when to take profits, again, I'm not a financial advisor. I'm not providing you any trading investment tips at all. I'm just giving you some insights into how to capitalize on these dates potentially. These are dates put out there for you and I to be able to read and tap into. So let's tap into them. That's it. That's all I'm doing, okay? So just to recap again, I don't want this video to be too long. It's about 18 minutes already. What we're going through here, mid-December 24, take profits ahead of Mika. Late February 2025, take profits prior to FedWire. June 2025, take profits ahead of Basel III. November 2025, take profits ahead of SWIFT. Late August, early September, usually seasonal effects at that point. And same for April. Again,
we making moves. We making major moves. We making moves. We making major moves. We going all in like we got nothing to lose. We making moves. We making major moves.
What is up, everybody? I'm Mr. Man. Welcome back to my channel. Today's video will be a little different. I'm going to go down the conspiratorial side of things. When I say conspiratorial side of things, I mainly mean more along the side of dates, events, and timelines itself that happen to line up. And we're going to take that and, I guess, add a little flip to it. So here we go. In July 2020, the U.S. Office of the Comptroller, the OCC, issued an interpretive letter stating that national banks have the authority to provide cryptocurrency custody services. This followed by further clarification in September 2020 and January 2021, allowing banks to hold reserves for stablecoin issuers and participate in independent node verification. Institutional adoption accelerates. Now listen to these timelines I'm giving you here, and then we'll start to take a dive down the road. By the end of 2020, 20 to 30 governments worldwide were seriously exploring central bank digital currencies. Major financial institutions like JP Morgan, Goldman Sachs, B of A announced, Bank of America announced the launch of a crypto trading desk in 2021. 2023 to 2024 is crypto building infrastructure. So financial institutions globally invested heavily in blockchain technology and digital systems to accommodate the growing digital asset market. SWIFT, the global messaging system for financial transactions, conducted experiments to connect public and private blockchains and interlink CBDCs on a global scale. Governments and financial regulators worldwide worked on creating comprehensive regulatory frameworks to foster innovation while maintaining investor protection and system stability. Investor protection. 2025. Okay? Starting in 2025, banks across North America, Europe, and Asia will embark on live trials of digital assets and currency transactions over the SWIFT network. Why in 2025? FedWire goes live with ISO 20022 for cross-border payments. March 10th, 2025. End of the year, November 22nd, 2025, SWIFT relinquishes the coexistence periods of MT messages for MX messages, which is rich data messaging, which is also ISO 20022. That's how they can go live with digital currencies. This marks a significant step towards integrating crypto assets into the traditional financial system. So, by this time, over 70 countries across both emerging and established economies are engaged in CBDC research projects or pilot programs. 2026 to 2028, the mainstream integration, okay? The financial industry sees widespread tokenization of equities, bonds, and other traditional securities through tokenization or direct digital issuance. We have trading, clearing, and settlement infrastructure begins to evolve to support the trading of digital assets on a global scale. The use of digital cash, including stablecoins and CBDC, becomes more prevalent for settlement purposes. Remember these dates, and I'm going to give you guys the game on this one here. By 2029 and 2030, the new financial ecosystem emerges. Traditional financial systems intermediaries see their roles evolve as decentralized technology becomes pervasive. And there's the global interoperability, a robust ecosystem of commerce centered around crypto assets is established with seamless interoperability between traditional and digital systems. So now that we have that timeline, here is the conversation I had with AI to come to some conclusions. So this is my question. I want to get really conspiratorial with me and dive deep into the depths of the internet to help me create an alternative motive the Federal Reserve can create to make people believe they have something when they don't. Look up how much gold they claim to have and cross-reference that with their last completed audit to confirm if what is reported to exist actually is correct. Let me know if the gold that was reported to have moved due to the Vatican asking for all the gold. Why would the Vatican ask for all the gold and liquid assets? If the Federal Reserve doesn't have the gold that they claim to have, what type of an effect could exist if they were selling unbacked gold certificates to buy Bitcoin to create a strategic Bitcoin reserve? USDT mints coins every time the Federal Reserve prints more money. Keep in mind, the value of Bitcoin exists as it is today because it's propped up by the value of USDT. What happens to people who purchase Bitcoin and did not know this? What could happen to the crypto space, the physical economy, and Bitcoin? Give me 3 scenarios, then choose a scenario that is most likely to happen and provide context into why it's most likely to happen. Let's take this dive, okay? So, gold reserves and audit. The Federal Reserve claims to have 260 billion fine troy ounces of gold, valued at 11.041 trillion at the statutory rate of $42 an ounce per gold. However, the last comprehensive audit of the U.S. gold reserve was conducted in 1950s, raising questions about the accuracy of these claims. And there's no evidence of the Vatican requesting all the gold and liquid assets from global institutions. However, Pope Francis in 2022 did instruct Vatican's entities to move all funds to the Vatican Bank by September 30th, 2022. I'm sure you guys remember that. I remember speaking about that. This move could be interpreted as a consolidation of assets in preparation for economic instability. So, the empty vault scenario here, okay? The Federal Reserve doesn't have the gold it claims. Instead, it's selling unbacked gold certificates to secretly accumulate Bitcoin, creating a strategic reserve. This could lead to, hold on a second, I want to show you guys this here. This is currently the document I'm reading. It's called Digital Gold, Evaluating a Strategic Bitcoin Reserve for the U.S. And let me tell you, they make it sound so good. However, they also give scenarios of what might not be so good as well. But they paint this picture, this vivid picture of a Bitcoin reserve for the U.S. backed by gold certificates. Certificates, right? Not even something that they claim to have. Something they claim to have, but there's no value, actual proof of it being of them having it. And they call it the SBR. Implementation of an SBR would require careful planning, including a development of a comprehensive legal and regulatory framework, a phased acquisition strategy, and a robust security protocol. And they continue on with that and how this can and cannot help U.S. with this Bitcoin strategic reserve. So as we were saying now, so this could lead to a collapse in gold markets when discovered, skyrocketing Bitcoin price at that point, potential economic chaos as trust in traditional financial systems erode. The USDT domino effect now. The Federal Reserve is colluding with Tether, I believe this, to prop up Bitcoin's values. So if this was exposed, USDT could collapse, dragging down Bitcoin and the entire crypto market. The entire crypto market. Millions of crypto investors could lose their funds. A ripple effect could impact traditional markets. Here's the Great Reset scenario. So the global financial institutions, including the Federal Reserve and Vatican, are preparing for a planned economic reset. And this could involve a sudden shift to a new global digital currency, massive wealth redistribution, potential social unrest as economic systems are overhauled. The most likely scenario, okay, is Tether's influence, which is USDT, plays a crucial role in the crypto ecosystem, often used as traditional pair and store of value. Its market cap has grown exponentially, raising concerns about its backing. This stablecoin company makes more than BlackRock does. Like, come on, man. Like that's doesn't make sense. So Tether has faced increasing regulatory pressure with questions about its reserves and operation. Many crypto traders rely on USDT, creating a potential systemic risk. Financial markets have experienced similar situations before, where the collapse of a seemingly stable asset triggered wide market turmoil. So if this scenario were to unfold, this is what we could see, okay? A rapid devaluation of Bitcoin and other cryptocurrencies, widespread losses for crypto investors, particularly those unaware of USDT's role, potential contagion to traditional financial market, increased regulatory crackdowns on the crypto industry. So that would be a terrible thing to happen. Terrible, terrible, terrible. Would not want that to happen. Or not wish that to happen to anybody. But should it happen, here are some key dates for y'all to be aware of, okay? So June 30th, 2024, MiCA regulation had begun. December 15th, 2024, the FASB, Financial Accounting Standards Board, had come out with AU 2023-08. And that talks about the financial accounting updates now with crypto assets. January 17th, 2025, that is DORA is being implemented in the UK. March 10th, 2025, FedWire goes live with ISO 20022. July 1st, 2025, the Basel III transition begins and Europe ends the coexistence period. November 22nd, 2025, SWIFT ISO 20022 adoption. July 1st, 2028, Basel III compliance. Now with this timeline that we have here, let's play out that scenario I told y'all about, okay? So this scenario could play out over a span of 3 to 4 years, from 2023 to 2028, and here's the timeline, okay? 2024 to 2025, initial regulatory changes. So MiCA regulations come into effect, impacting crypto asset service providers. DORA implementation enhances digital operational resilience in the financial sectors. FedWire and SWIFT adopt ISO 20022, standardizing financial messaging globally. 2025 to 2026, market adjustment and transitions. Basel III begins, affecting bank capital requirements and risk management. Potential market volatility as financial institutions adapt to new regulations. Increased scrutiny on cryptocurrency markets due to MiCA implementation. Y'all can see this, I know you can. 2026, 2027, crypto market turbulence. Possible exposure of issues related to USDT backing and Federal Reserve activities. Look at this. Look at this. Potential crypto market crash if USDT domino effect scenarios unfold. Ripple effect on traditional financial markets. 2027 to 2028. Economic fallout and regulatory response. Widespread economic impact as crypto losses affect broader markets. Intensified regulatory scrutiny and potential new emergency measures. This leads up to 2028, the U.S. presidential election, with financial system reforms as a key issue. July 2028, this is the full compliance for Basel III. Banks required to be in full compliance with Basel III reforms now. Potential for a more resilient banking system, but also possible unintended consequences. I mean, think about it. For them now, the banks now to hold capital requirements in their banks. That's going to hurt the economy. So now that we have these dates, these markers and indicators in our lives here, let's put this into the real world application of market, okay? So let's figure out how we navigate this market now that we have those dates. December 30th, 2024, MiCA takes effect. What is the upside to that, and what could the downside look to that, and what is the strategy? So, positive impact provides regulatory clarity for crypto markets in the EU, potentially boosting investor confidence and market stability. The downside to that, initial compliance costs and adjustments could create short-term volatility. The strategy, consider investing in compliant crypto firms that are well positioned to benefit from regulatory clarity. March 10th, 2025, FedWire goes live with ISO 20022, the upside to downside. Upside enhances payment processing efficiency and interoperability, potentially benefiting financial institutions. Downside, the transition challenges could cause temporary disruptions. Okay? Basel, July 1st, 2025. The beginning of the transition. The upside strengthens banking system resilience by increasing capital requirements. The downside, banks may reduce lending to meet new requirements, potentially slowing economic growth. November 22nd, 2025, SWIFT goes live with ISO messaging. The upside further streamlines global financial messaging, enhancing cross-border transaction efficiency. The downside, implementation challenges could lead to temporary market disruption. Imagine the downside on that. 2026 to 2028. Ongoing regulatory adjustment and Basel III full compliance by 2028, okay? The upside, long-term market stability as regulations are fully implemented. Downside, potential for market corrections as companies adjust to their new regulatory environments. So, for y'all looking for strategies out there, this may or may not be what I'm doing, but this is something I'm definitely considering here. Here is how to navigate these waters. By mid-December 2024, about 2 weeks prior to MiCA regulations taking effect on December 30th, this allows you to capitalize on any pre-regulation price increases, just like before Trump got in. You began to see the market build up and build up and build up and build up, Buttercup, baby, just to let me down, right? Build up and build up and build up. You can see the market sentiment building and pricing these things in. Take profit. So while avoiding potential short-term volatility as the market adjusts to new rules. Late February 2025, approximately 1 to 2 weeks prior to FedWire going live with ISO 20022 of March 10th, the timing helps capture gains from any anticipatory market movements while sidestepping possible disruptions during the transition. Could be a time to take profits. Mid-June 2025. 2 to 3 weeks ahead of the Basel III transition, start on July 1st, 2025. This strategy aims to benefit from any market optimism while avoiding potential downturns as banks adjust their practices. This is how we use dates to our advantages, as triggers. We're not looking at it as, oh, this is the date, it's going to go to the moon. No. You need to take profits. Early November 2025, this is when SWIFT goes live with ISO 20022 messaging. About 2 to 3 weeks prior to the SWIFT ISO transition, on November, the timing allows you to lock in profits before any implementation-related market turbulence takes effect. Okay? We don't know what's going to happen yet. We don't. Late August to early September, annually, this happens annually, clockwork. Historical data suggests September often sees negative returns in the stock market. Taking some profits in late August or early September could help protect against this seasonal trend. Mid-April, annually as well. April tends to be one of the strongest months for stocks. Consider taking profits in mid-April to capitalize on this seasonal strength. So if you're playing the macro game, looking how and when to take profits, again, I'm not a financial advisor. I'm not providing you any trading investment tips at all. I'm just giving you some insights into how to capitalize on these dates, potentially. These are dates put out there for you and I to be able to read and tap into. So let's tap into them. That's it. That's all I'm doing, okay? So just to recap again, I don't want this video to be too long. It's about 18 minutes already. What we're going through here, mid-December 24, take profits ahead of MiCA. Late February 2025, take profits prior to FedWire. June 2025, take profits ahead of Basel III. November 2025, take profits ahead of SWIFT. Late August, early September, usually seasonal effects at that point, and same for April. Again, I'm not telling you what to do. I'm not telling you how to operate your portfolio. Regardless of what I state, whatever happens to your portfolio is your fault. If it goes to the upside, that's your fault. Good fault. If it goes to the downside, that's your fault. I'm just providing a framework for strategies based on documented dates put out there by the World Bank, IMF, SWIFT, Federal Reserve, DTCC, anybody else out there, EU, UK. I'm just giving you dates and potential take profit times. It's really up to you what you want to do. I provided insight into the strategic Bitcoin reserve, the conspiratorial side of that with Bitcoin and USDT, as well as what the Federal Reserve could be doing in the background, and then ways to mitigate that risk by taking profit. I hope you guys found value in this one. I will see you on the next one.
We making moves. We making major moves. We making moves.